Welcome back, Tim. Nice to see you here. Today we are here with Joel, and I think Joel has been with us once before, maybe a few months ago, if I'm not mistaken.
Yep.
And today we're doing a new session, and we're going to go over some data-driven analysis. We're going to look at SPX. We're going to look at things to watch for, CTAs. But before we start, Joel, welcome. Nice
Thank
to
you.
have you here. And,
Thank you, Fabio. It's great to be with you.
And then for those who don't know you, who haven't seen the last part, maybe like if you could just give a brief introduction of you,
Right.
what you've done, and
Sure. Okay. Well, thank you. I've got a lot of IT experience. That's really what I've done. So from a from a background point of view, I have an engineering degree, electrical engineering degree, and I spent most of my career doing software development in the banking industry. But I also had an affinity for trading, and I've been trading options with various strategies probably over the last 20 to 25 years. And really over the last 18 to 20 months, I would say 18 months or so, I've actually done it as a full-time process. So that's what I'm doing. So full-time, that's my job, is to trade the market. And I've developed a data-driven approach. I mean, previously I used to just look at really technical analysis, and then I've incorporated some other things like option, market profile, volume profile, which is like the auction process. And then more recently, I guess over the last 9 months, is when I started using the data-driven approach. I started using the MenthorQ, which is just another thing I use to basically enhance my process to come up with a data-driven approach to trading the market. Primarily, I'm trading the U.S. market, and even more specifically, I'm trading SPX and SPX options.
Okay.
So today I'm just going to go over a data-driven approach that I use to help me figure out what I'm going to do. So from a simple point of view, as we all know, the market is trading down over the last 6-7 weeks. And so my net thesis is really to just trade with that trend, to observe it and trade it with the trend, and use the features inside the site as well as other things to help me come up with, let's say, a weekly plan where I'm trading the market. So I think, like for today, what I'd like to do is just really start with the MenthorQ data. And I typically will look at the end of day data to start with, to sort of, to come up with a series of data points to help me come up with a plan. So I start with looking at the SPX. And this is the main window for SPX. Select index, select SPX, and you can actually see some various different things. He's got some scores related to options, volatility, momentum, seasonality. I haven't actually, to be perfectly honest, I haven't actually used these things. I mean, I've looked at it on a day-to-day basis, but I haven't actually used that as part of my plan. What I have used really are some of the key things here, which have been around for a little bit, which are these key levels, this option matrix, the net GEX, overall net GEX, multiple expirations, and some of these other things, in open interest, swing model, implied vol. But I'm going to start with, there's a lot of stuff here to digest. And my suggestion is that anyone that's looking at this is really sort of take your time to go through it, watch the videos, read, and try to improve yourself a little bit every single day, my goal. So one of the things I start with every day is I look at the volatility small. To me, this is like sort of a very, very key thing to how the market is being traded, and it's just really something that cannot be manipulated. It's the S&P 500, which you have people from different time frames looking at it, a day, a week, a month, whatever. You have all sorts of different players that are involved with it. So I look at this, and we can see obviously that puts are very, very rich. Yeah, you can see that in a lot of different ways, high VIX, but also calls are fairly rich as well. So you can see where things are starting to turn up in calls. From my perspective, there is a development of interest in call buying, believe it or not, little bit right now. So I'm starting, from that perspective, that's an interesting data point. So from today, the smile is showing here where it was yesterday. It was here where it was, let's say, a month ago. So we're definitely higher than we were a month ago. And there seems to be a very key inflection around this, 5,800 to 6,000 area. So that's one thing I start to look at. I also look at some of these other interesting things here. I like looking at this particular feature. It's useful, and it really kind of tells you. I try to think in terms of mean reversion, that if the rubber band is stretched too far in one direction, there's a tendency for the rubber band to move in the other direction. So I kind of look at this picture here from that perspective, this being the SPX and this being the model that's showing that really over from, I guess, the end of February, it was starting to show that there was an opportunity here to go long. But as you can see here, because the market's been so extremely bearish, the opportunity to go long was really for a day or so. So like, for example, here we saw it go up for a day. And here we saw it go up for a day, come down, go up for a day again. And now it's like that again. So the question is, okay, so how do we, sort of like generate a perspective on using that? So I look at that is that when this goes up, or we see a nice movement in the SPX going higher, that implies that, to me, that calls are expensive. And since we are in a bearish trend, I want to be a net seller of calls, but doing that in a somewhat judicious manner, meaning that I want to put a long in front of those short calls. So I will generally have a structure which is like a broken wing butterfly. So it's like one long followed by two shorts, followed by another long. And so that's kind of the idea with that. So again, we can see that the model has shown us to be like oversold, and potentially it's going to go higher. But, until it does, it doesn't. So, we just kind of look at it from a day-to-day perspective and, use that approach to make a determination. So that I use that. Then I use this particular feature as well, the term structure, which shows where we are relative to where we were in the past. Are we is volatility increasing? Is volatility decreasing? So that's really what it is, and where we were relative to yesterday and a few days ago. So you can see that relative to yesterday, we're lower, but relative to like a month ago, we're higher, which is sort of obvious, I guess, if you if you follow the market and you watch the VIX, you could see that the VIX has just been increasing. But what's interesting, what's notable here is this like little hitch up. This is from last night, by the way. So, and then it just simply tanks fairly dramatically. So this one and this was pricing in. Yesterday we had CPI, and today I believe we had PPI. So so once those news events are out, whatever people hedge, they sell those puts, or you have that volatility crush where we just see that decay. So that's what that happens. So I'll look at that as as another guidepost, so to speak. Okay, so we went through those three things here. Another thing that I like to look at is the net GEX chart. I like to look at the overall picture first, which is the general question I always have is like, where is the general inflection point of where things go from bullish to bearish, and potential areas I may want to target. So here, interestingly enough, the call resistance area seems to have moved up fairly dramatically, moved way up to 6,500. So I guess this is what the data has shown, but the high level node area where you have an inflection point of bullish to bearish is around 59.40. So that's in this area right here. But we're really much lower today. I mean, the SPX is 55.60 or so. So we're like 40 points below yesterday, in fact. So we're somewhere in here. So that's it with this, I can say. And then we can take a quick look at the multiple expirations and see if there's really any change with what's happening, with how people are positioned. And you can see really for the most part here, everything is extremely bearish. The positioning is very, very negative. But at some point, something is so oversold and so heavily sold that you will see a movement to the other side. And because the move that we've seen over the last, I don't know, like 20 to 30 days has just been so severe. It's really like an elevator down, so quick and abrupt that we may see like an elevator up, as a mean reversion play. However, my feeling is I don't really want to be in front of that train when it actually does. I believe it will happen. It's not a matter of if, it's a matter of when. But again, we want to let price action ultimately dictate what we do or what I do. And because I'm really just trading short term, like 1-2 weeks out, I take a viewpoint and, put on a trade or two. The next thing I'll typically look at is this option matrix, this grid, and to just get a sense of where if I'm looking to sell calls, I'm looking for an area where I believe that the S&P is not going to go through. So if we go through this, we can see I don't know if you can see it clearly or not.
I think you should be able to click on the image, Joel, and zoom in.
Okay. And then it's going to open up a browser session. All right. Oh, I see. Okay, that's fine. Okay, so if we oops, I'm doing that, but okay. I just want to sort of highlight some of the key points here. I'm just looking at, so here from an overall perspective, if you look at the other chart showing 6,500 as that level, but if you look in a more granular level, you'll see somewhere between 5,700. If we look at like the next 10 days or so, we move really from, let's say, 6,250 from 5,700. So it appears that there is money being that's put out there that's attempting to look for that mean reversion. So I would imagine at 5,900 those calls are relatively cheap out there. So you can imagine if you get a gamma squeeze that those low value calls will actually potentially jump up 200-400%. So, if you just simply bought those outright. So anyway, again, this is just something to look at, to note from that perspective. That's what I'm looking at. Again, I'm looking to sell calls overall right now because the market is bearish. All right, what else am I looking at? So I trade with thinkorswim. And one of the things I have used this year is, let me put it there. Can you see my chart, Fabio?
Yeah.
Okay. So this chart kind of interesting for me in the sense that this chart is an hourly chart with a moving average, which is 65 minutes. 65 minutes sort of like maps out the day time frame in the US. And since like the middle of February, this thing has sort of hovered around this 1 hour chart, around this moving average, and then sold. Look at that. It's pretty remarkable that it touched and then sold, touch and then sold. And this week, this one, this is the this is the S&P futures. This was CPI yesterday. Notice we have the big tail. We have this big tail here, and then we sold. We went up here and sold. But what I think is happening, if you look at this moving average, and again, this is like very simple stuff here, is I'm looking at the perspective of, are we going to make another low? We made a low the other day of 55.34 in the S&P futures. Are we going to break that or not? So interesting for me to look at how many touches, right? We've had like about 10 to 15 touches here. Is it going to break? If it breaks, then it's going to go down, maybe another 100 points or so. I don't know. I don't know what it's going to do, right? I don't have that crystal ball. But anyway, it's something I look at. But I also look at that this thing is starting to flatten out, and that potentially, when this thing breaks above this, I view that we go higher. How high? I don't know, but I believe that we will. But anyway, so this was sort of been one of my guideposts for trading this particular market right now, using that. Another thing I like to look at is market profile or volume profile. thinkorswim provides a feature to do that. And what I do, one of the things I started doing this year is to look at volume profile and market profile on a 5, 10, 20 day time frame. So you can see that this particular, so volume profile basically is, if you're not aware of it, it's really the auction market theory. So it's time or volume. So I like to look at time for the most part, not time, volume. So this represents the 5-day volume area high, and this is the low, and this is what's called the point of control. So statistically, 70% of the volume happens between this point and this point, and the area where the highest volume occurred was this point. Yesterday, it was actually a little higher. It was around here. was maybe six, I don't know, like 10 or 12. It was like a few points higher. Today it's here. So to me, that's kind of a key inflection point to help me understand how to trade. As if this thing continues to move down, it says that people are just net sellers of this market, which, again, to state the obvious, we're seeing it in real time. But once this breaks this particular area higher, if it doesn't break this low, we continue to fall lower. I believe inflection area would be to go here, would be this 80 to I don't know, 57, 80 or so. But until it does it, it doesn't. So right now it's just sort of in this area. And we just continue to, what I see is a slow grind lower. This market is really more about rotation up until about a week ago. A week ago, I started noticing, and I'll put up the sector spider, which I think is really kind of a very interesting chart. You can just simply look at this. And these are the pieces of the U.S. market. So if you break it down, there's communications, energy. I mean, you could obviously go there and look at this. This, to me, is just yet another data point to understand what's really happening. So, it's free. And just look at it. This is the 5-day movement of the sectors of the S&P. And this is really what's happening. So the only thing that actually was positive in the last week or so was energy. Everything else sold. And, technology, which is which you can view as the Qs or the NQs, the NQ futures. This is like the component of the S&P that represents that. So I tend to look at this piece as being a very significant piece because we have, the 6 or 7 companies that are, multi-trillion-dollar companies and potentially can move the market and give you the impression that the market is doing well. But those things are actually, so that's what this represents here. Anyway, so that's that particular point as well. So last week, we saw that everything was selling. So which is like 1-to-1, which correlation of 1-to-1, which is pretty high, which means that everyone's just dumping the market. Up until about a week ago, that wasn't really the case, but that has been the case over the last week. I mean, if you look at it over the last month, even the last month, you can see here, discretionary, this is like Tesla, is down 12%. Technology down 10%. That's the Qs. Financials, so that's like JP Morgan. Anyway, so let's move on to the next thing that I'll look at, which is on the MenthorQ site. One of the things I find interesting is to look at the models that Fabio and his team put together. So one of the things I started to explore was the CTA models. And again, look at that for, for the SPX and the NASDAQ. So if you look at the SPX, and again, it's just pretty basic stuff here, you can see that positioning is really at the bottom. If you look at here, here's another inflection point. And then the thing just dramatically moved higher. But until it reverses, it doesn't. So, but it's a key, for me, it's sort of a key thing, key point in saying that I think we're closer to a point of mean reversion than we are for it to continue to slide down. Again, it doesn't do it until it does. But to me, this is a very, very key inflection point. It's actually lower than it was at this point. You can see something very similar action with the NASDAQ as well. Here is that same point that I described with the S&P, and then you can see the S&P made a low, and then it's again, this is the NASDAQ, excuse me, and then it moved higher. Again, same thing here. This is it's even lower than this. At some point, professional money managers are going to, I believe, will look at it and see, wow, these things are so cheap right now. It's time to buy, and maybe willing to sit with it for a little while the market sort of resolves itself. But at some point, people look at it from a more of a macro point of view, or whatever the balance sheet for these companies, and make a decision. So that's the what you may call the innovators, right? They say things are so cheap it can't go any lower. Anyway, so that's another thing that I'll look at, are these particular models. You can see these things here as well. This is a tabular form of view. You can see how it changed from today to yesterday. So I'll look at that, where we were previous times for the NASDAQ and the S&P. So you can see the net changes from day to day and then from a month ago. So it just gives you an eyeball of what's really happening. And they actually, Fabio's team actually scores it as well. Okay, so the next thing, what I will look at is this vol control models. And what you can see, they've got a couple of different things here also. And again, it really, from my perspective, it just kind of confirms the same things that I've been saying before. The market is very oversold, and at some point, it's going to mean revert. Exactly when, I don't know. I don't know when that's going to happen. But at some point, big money is going to look at it and say, "Wow, this is cheap," and it's going to go higher. So you can look at it from that perspective. So one thing is the relative strength in this index. It's like a technical factor and relative strength here. If you notice, everything's really at the bottom, lower end. And then you can see the number of stocks with with the 14-day RSI greater than 70. But here you can see that the RSI goes from whatever plus 70 to plus 30. In that below those values, you're either extremely overbought or extremely oversold. So, and he's got a moving average along with it, so you can see what the trend is of that. So again, another indicator that the market is really extremely oversold right now. And again, a number of stocks above the upper Bollinger Band. It's like the standard treatment of that is like 2 standard deviation of that. If you wanted to look at that, and then he's got a moving average, a 10-day moving average, simple moving average of looking at that. And again, you can see it's at the extreme lower end. So again, the rubber band is getting really stretched. So those are, I would say, some of the key things to look at from the site that I look at. So now what? Now what do we do? So my viewpoint is I really want to be a net seller of calls. So how do I do that? So how do we do that? How do we make money in this market, right? I don't think this market, I think the way to do that is to look at when calls get expensive and sell them. So like yesterday. And how do we express that viewpoint? That viewpoint is what I'm trying to do is I'll look out, let's say a week out, and I'll buy, let's say a 30 delta call, and then sell to 20 delta calls, and I'll do that maybe 5 days out. So, and I'll sell that, and then I'll add a wing to the end of it to reduce my margin, so that the trade is manageable. But I'll put that trade on for a credit. So, for example, like I'll tell you what I did the other day, yesterday actually, when the market was actually up for the day. What I did was I put on a broken wing butterfly. So that means buy one long, sell two short, and then buy another call at a significantly higher value, just to basically cap my margin. So that's what I did. So for yesterday, for example, I put on is it okay to talk about an example, Fabio, or just speak in general terms? What's the right?
Yeah, just general terms. I think this is not, of course, investment advice, but
okay. No, I want to just make sure that I do the right thing. So anyway, so that's, I mean, I kind of covered what I think makes sense for this market. Sell expensive calls, buy a 30 delta, sell two 20 deltas, and then cap off the margin with, let's say, a 3 delta call, and do that. How do
you manage risk, Joel?
How do I manage risk?
Yeah.
What I do is I'm doing that, let's say, 5 to 7 days in advance. So if the market actually goes higher, right now, let's say my first long call that I bought yesterday was approximately 100 points higher. So I'm going to look at if the market actually moves towards that strike, I'm going to potentially take it off. Or if the market, if we have a really big gamma squeeze, I may take off the whole spread, or I may reposition the short strike or the long strike. So it really is a case-by-case basis for how to manage the trade. I don't know if that gives you a viewpoint or not.
Yeah, sure, makes sense. Let's see if we get questions, guys. So if you have questions here, please let us know. And if not, we can continue. No questions so far, Joel. I'll keep you.
Okay, no questions so far. I mean, this is really kind of it in terms of what I do. I mean, again, I'll look at, one of the other things I'll look at also is the VIX. If we look at the VIX, we can see that the VIX is really flat. I mean, the S&P is down really 40 or 50 points today, but the VIX is basically flat. So it basically says to me that sellers are kind of running out of bullets right now. Generally, and also if you look at the VIX futures, they're basically flat. So, again, the market has moved so far down so quickly that the better trade is really to go long in some manner rather than short the market. So that's what that tells you. The other thing I will look at is how the VIX relates to the VIX futures, and the VIX is in backwardation, which means that the VIX is higher than the VIX futures. So generally, there's more risk to the downside when that happens. So that's another sort of key thing to look at. And I'll also model the trend. I'll look at the VIX futures trend. When I see the VIX futures start to collapse below a key moving average, let's say like a 10-day moving average, I know that maybe it's time to potentially go long. So those are some other key things that I'll look at.
Right.
That's pretty much it, frankly.
All right, awesome. Let's see if we get some questions, and then, guys, to access all the things that Joel showed us. You can create an account, sign up for our premium membership, and you get access to all our tools within the dashboard. So here is an example of how the dashboard looks like. You can customize it. You can create your watch list. You have access to our intraday data, our end of the data. You have access to futures, our CTS models, our screeners. You can also connect your account to the different trading platforms that we support. So TradingView, Ninja, and all of these. So if you guys are interested, I'm just gonna share the link here, and let us know if you have any question for Joel on things that we discussed today. If you guys have any question about MenthorQ, this is our website. You can also reach out to us at info@mentorq.com. And then, yeah, let's see. So far, no question, Joel. So I think it should be good. And I think we'll be back in a couple of weeks. And then we're going to go over some other things. And let us know, guys, if we can help you in any way.
Yeah, I mean, one of the other things, maybe next time I can go over some of the screeners that you have. I think there's some interesting ideas with that. Like the gamma screener is like potential, if you're looking to sell individual stocks, maybe look to sell premium at the call wall, for example. So for example, I mean, I didn't look at this today because I was really preparing for, but I would look at something that's sort of near the call wall. I would look at something that's got some good optionality, that, where the spread is relatively tight. And then, would also look at, I would go through the same process that I did for SPX. I would then look at all the data related to it and see how it looks. And then, again, look at all these different metrics, the volume profile, the, where it looks like on the chart, etc. But the key thing, I think, if you're looking to sell premium, because that's really what this market's all about, is to sell, in this case, we want to sell calls. We want to trade in the direction of the market, and the market is down. So we want to, I would look for that, and then look for something that's got tight bid-ask spread.
Mm-hmm. All right. Awesome. Yeah, we can go
over.
over.
A way to trade it
is very, very interesting. We have a lot of different screeners here. We're also going to add some screeners around our Q score very soon. So stay tuned about that. And that's awesome. Thank you, Joel. And
okay, you're welcome.
I don't see any questions so far.
Okay.
Very soon, maybe the comment doesn't put in the questions, but
okay.
Thank you so much, Joel. And
okay.
Speak very soon, and thank you guys, and see you guys soon. We're gonna have another live session later today, and then we're coming back next week. So thank you guys.
Okay, perfect.
Have a good day. Bye.
Thank you so much, Fabio. It was great.